ARA. Local and global market opportunities safely at your fingertips.
Smooth 98.1, love music, love life. Thank you for staying tuned here on Smooth Breakfast Show. I am Ayo Mairo-Ese, and it's time for Business Express 981, Tuesday, 5th of October, 2021. Joining me this morning, you heard his voice yesterday. He's sitting in for Rotus, who's off this week. We have Onome Ohwovoriole. Good morning.
Yay. To Judith and Kayode and everybody else on Smooth FM that murders my surname. Pay attention.
Excellent. Thank you very much, Onome. Good to have you. Also joining us this morning from ARM, we have Oluwadara Olunuga. Good morning, Oluwadara. Great to have you on the show.
Good morning, Ayo. Good morning, Lagos. Thank you for having me.
Excellent. All right, so this morning, if you'd like to be a part of the conversation, you can go onto our YouTube channel. We're streaming live on YouTube. Search for Smooth 981 FM Lagos, and you can see all that's going on. See our faces and listen to the conversation, as well as contribute by using the live chat box. If you'd rather listen to us but still want to send your message, then you can do so by sending to WhatsApp. WhatsApp number is 0809 444 0981. So big one here from NIBBS. We have information. I'll just go through very, very quickly. In terms of 31.7% of youths lacking access to bank loans for business. Now, I'll come to you for this one, Oluwadara, and of course, Onome and anyone else who would like to comment on this. What would you say the impact or the lack of access to loans? What's the impact of it?
I mean, access to finance has been one major issue for SMEs in Nigeria. I mean, it's been tedious getting access to financing, and this is majorly because of the way the businesses are structured. So I would like us to look at this in two perspectives. One is the perspective of the banks and the perspective of the businesses. Banks are majorly for profit making. They are not a social enterprise. They are established by some shareholders, and they need to also make profits. So banks will lend naturally because lending is even more profitable than probably investing in investment securities in this climate, but they need to be sure that they are going to recover the loans. And the riskiness of these businesses makes it very expensive to borrow from the banks. Take, for instance, the banks are highly regulated. They have to maintain certain ratios at certain levels. The NPLs have to be at a certain level, 5%. The capital adequacy ratio, which is the proportion of the capital to the risk-weighted assets, has to be above 15% for most of these banks. So in the way the ratio is calculated, the assets are weighted in line with their risk. So cash is like zero. Cash has zero risk, and so it's weighted like 0%. But when you look at other assets, loans especially are weighted based on their riskiness. So imagine me lending to a blue chip company, a corporate. Compare the risk to me lending to Owonikoko Enterprises that is probably not registered, or is not even registered with CAC and doesn't have his track record. So if the riskiness of the business is what makes it unattractive. Of course, lack of access to finance is not good for businesses. But what I would think is for a business that is just upcoming, should look to development finance institutions rather than the banks for lending. These people are focused on developing sectors of the economy. That is what they majorly do. So they can work with you, work through your books, help you structure your businesses. But if you're not a structured business and you're applying to the banks for loan, then I think you may not be getting the right.
And I'm sure a number of people who have small businesses would be able to identify, with what you just said, and identify with these numbers, Oluwadara. Onome, I don't know if you have a take on this one.
Oh, yes. I think that what many small businesses need, especially starting out, shouldn't really be a bank loan, as Oluwadara said. They can look at maybe venture capital. They can look at family and friends, because we're in a double-digit interest rate environment. So except you really have that kind of turnover, right? Or except you really are making really high margins. If you're doing 15, 20, 25%, depending on where you are on the ladder, I don't think that a small business or a young person just starting out can work with those rates. So they should look at other, sources of finance. And I also feel that even though it's being done, a lot of people need to put their books together from the get-go. Because you find out that people sit up with all those things when they want to get a loan or when maybe external investors are coming in. So if we can have people putting structure early, because sometimes it's not that we can't see that the sector isn't profitable, but if there's no structure, you're going to have to put that structure before you can get money and then, access the loans and all that. So really, I think that for most people who are just starting out, a bank loan, a regular commercial bank loan, shouldn't be the first point of call. Start with family and friends, start with venture capital. Bootstrap your way first. And once you have significant traction and structure, then you'll have access to loans.
Brilliant.
I think one thing I want to also add, sorry to cut in, is the fact that most of these businesses do not have, they are not separate entities from their businesses. Most people run the businesses through their personal accounts. They can't even account for what happens. So that way, they don't even know if they are profitable or not. You see an entrepreneur buying personal stuff from business accounts, buying phones from business accounts. They make one headway today and they decide to just spend. So no bank wants to lend to you if you have not been able to tell. You can't articulate how your business is performing separately from your own personal pocket.
So if I hear you correctly, because then that feeds into what I would have asked next in terms of how can the situation be improved. I know there's the point of view from the business owners, but there's also the point of view from the banks themselves, the lending organizations. So I'd like you to speak to that. From the business owners, I mean, from what I've heard from you, number one is structure, proper structure. Number two is also in terms of keeping their books properly, no matter how small the business is. So separating personal income and expenditure from your business income and expenditure. So that's very, very, very good information. What else? What other ways can we improve the situation so that younger people can have access to loans when they do need them?
Okay, so the same reports that reported that 31% do not have access to loan also reported that just 9% of these businesses are registered with the CAC. Businesses are not registered. Nobody to track. No, there's no track record. How have you been doing? Aside from just structuring your business, you must be able to tell me what is your profitability, what is your margin on this business, and what are the expenses like. So put a structure, have track record, be registered. If possible, trademark your name. Let it be like a business on its own. Let it not just be like something you do on the side or something you do out of survivor instinct or something. So put a structure, try to raise funds, like Onome mentioned, bootstrap first. Raise funds from family and friends till you're stable. Then you can apply for a bank loan. Look to DFIs. We have the BOI. We have other institutions that are into developmental factors. So if you're in the manufacturing sector, you're in agriculture sector, tap into all of these initiatives that will probably be at single digits, and they would be interested in your growth. A bank has competing demand. The blue chips are there to borrow money in dollars. You are coming to borrow 200 million or something, and you don't even have structure. The money is not the problem. Recouping it is the problem, and nobody wants to put a bad loan on their books.
Yeah. All right. Thank you very much. Onome, do you have anything to add? Okay. All right. So I'm not sure you can hear me. Let's move on very quickly to our next. Let's move on very quickly to our next story. So former Deputy Governor of the Central Bank of Nigeria, Tunde Lemo, lists reasons why Ghana is a better destination for foreign investors than Nigeria. Even without him saying the obvious, what some people have considered the obvious, we have some blue chip companies who have decided to pitch the tents in Ghana rather than come to what is considered the most populous Black nation in Africa, or the most popular nation in Africa, or the biggest GDP in quotes in Africa. So in Nigeria, they'd rather go to our neighboring Ghana, which is comparatively smaller in size, numbers, GDP, and so on. So why is Tunde Lemo saying Ghana is a better foreign investment destination than Nigeria?
You would agree with me that regulation is one thing any investor that is coming to Nigeria wants to consider. Look at what happened to the ride-hailing companies in 2019, 2020. At first, they were asked to come register, to come pay some fee. Then later, bikes were outrightly banned. If Gokada has not been able to transition into deliveries, it would have been a mess. All the investments would have been lost, although it is our own loss also, unemployment and disposable income and the likes. So regulation is one thing that scares off businesses. Last year, Twitter decided to establish African headquarters in Ghana instead of Nigeria, like you mentioned, and they're appropriately justified. If you see what happened months later when Twitter was actually banned in Nigeria, so I think it's glaring. aside from our fundamental and structural issues, which you already have infrastructural deficits, where businesses cannot move around in record time, the transportation system is whack. Allow me to use that word. Power is always an issue. There's power outage and other infrastructural problems. And the fact that disposable income is even waning in the country, right? The government is not making it any easier. Ease of doing business is just not it. There's a lot of bureaucracy when it comes to you registering your business, even filing for tax and all those other things have their own problems and hindrances. And it becomes cumbersome for a small business, when you have to file documentations with about 3 agencies, and we know how it goes with government agencies. How you have to pay your way through sometimes, and take a long queue. If you don't know who knows who, you just be there. So those things are not making it easy for businesses, and no business wants all these bottlenecks. A business already has own bottlenecks, in terms of sourcing for customers, sourcing for materials. It's enough. And of course, the exchange rate issue. If you're a multinational, that would be an headache for you. You don't know when exchange rate would move up. There's a lot of uncertainty in the macroeconomic environment. This also scares off foreign investment. So Sunelamo is right, in the sense that investors look to other countries, Kenya, Ghana, which are smaller economies when compared to ours. We have the numbers in terms of population, right? We supposedly have the highest GDP, but these are not translating to growth because of all these bottlenecks, infrastructural problems, government regulations that can just, spring up anytime. Recently, I think there was an issue with fintech, with the CBN. So a lot of times businesses are somewhat justified. They decide not to come to Nigeria because months down the line, you're like, thank God I didn't establish in this country. So I think those are the bottlenecks. Government is the elephant in the room, infrastructure. People are poor. Disposable income is waning because inflation is like double digits. Exchange rate is also making people poorer by the day. So those are the factors. Right.
Okay, just before I come to you, Onome, for this last story, let me quickly take some comments. Ogenochiko says the growth of the Japanese economy is attributed to a strong and sound banking system. Nigerian banking policy seems not to favor the ordinary man on the streets. They are more of agents of payment, period. Matthew Afolabi said, what is the population of Ghana and what is the population of Nigeria? 20 million and 200 million. He's asking why our interest rates are so high. It's almost as if the banks are not set up to help businesses. We are not comparing Apple with Apple. Then he goes back. We're trying to measure Nigeria's performance using Ghana as a yardstick. I think that's why it's such an unfair, such a shame, really, because like he's mentioned or pointed out, 200 million versus 20, yet an international business would rather go and invest in that country in terms of putting their headquarters. We must touch on this story before we go, and that's on the Facebook, WhatsApp, Instagram blackouts for the second time in 2021. They're back up now, thankfully. However, we saw how a number of people were affected by these blackouts. Onome, very quickly, because we have a few seconds to go. Do you think people are too dependent on these services to the point where an outage can disrupt businesses?
I don't think we're too dependent. I think the issue is, do we really want to have Facebook, WhatsApp, and Instagram, 3 major platforms globally controlled by one entity? Initially, that might not have been the goal, but I think it's something that globally and maybe competition-wise, the US will consider that. Let's look at spinning them off, really. So the problem isn't that we're too dependent. I mean, society from time always has a form of communication. There are town criers in the village, there's a post office and all that. So those things still remain. But we need to have this, and maybe that's the conversation the firm would have with regulators in the US, its key market in the future. Let's look at spinning them off, really. So we're not too dependent. Some people are not all of them, some people are only on one of them. Yeah.
All right, thank you so very much. Thanks a lot, Onome, and thank you, Oluwadara from ARM Securities, for speaking to us this morning on Business Express 981. I see some questions have come in our comment section, one on the Airtel shares. We'll talk about it hopefully tomorrow morning, so do stay tuned for tomorrow's edition. We continue Smooth Breakfast Show now with some great music, and then at 7:30 we come back for Freshly Pressed 981. Our analysts are here, and we want to get through some of the biggest national stories in Nigeria. This is Smooth 98.1. Good morning.
Business Express on Smooth 98.1.
Thank you very much.
Bye.
Bye. Have a lovely day.
You too. Bye.